All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. Want to give you guys some insight here to how you should be trading with software, okay? The profit pack is very specifically designed to be used a certain way. If you want to take advantage of its purpose, then you should build a trade plan around the way it's designed. It's more often than not, and I find this all the time with retail traders. They go, "Oh, but I think I can do better." Okay, and I'm sure you, as a trader, can do better. But if you're going to do better with a specific tool or software or technology, you should do it as it's intended to be used. Okay, it's really that simple. Now, the identifying component is very easy. It's a new trend change, which is found by this arrow here, and it would be a correction or penetration of the profit band. So when the band is blue, we have a bias to the upside. When it's gold, we have a bias to the downside. But when the candles look like this, I mean, you are basically gambling and playing financial suicide, trying to force a market to trend that's just simply not trending. So, how I've directed most of my clients to help avoid, this type of scenario is to simply use what the NinjaTrader platform already offers you, and that is an array of pivots. Now, you can set these pivots up daily, weekly. I believe you can even set them up monthly. Listen, you can use whatever you want to identify computer populated support and resistance. I don't care. Listen, I'm a big do it by hands kind of guy. I like my own analysis. It's just who I am. It's the way I am. I'm not saying it's right all the time or it's perfect. I like my own analysis. So I work off my own levels and my own drawings and things of that nature. Maybe you are too, and that's perfectly fine. But if you're not, that's okay. Simply select some method of providing support and resistance that auto populates on the screen that you have your profit pack running on so that you can qualify your trade. Okay? Identify, qualify, and then execute. So, identifying is very easy. Trend change, correction through the profit band. Okay? Doesn't have to pull all the way through. It can be as simple as just penetrating the band, which was in this instance. But notice this pivot point is the level that it penetrated at. So we impulsed and corrected into support, right? If you're going to buy the market, you got to buy at support or you have to buy a breakout. The profit pack is designed to buy at the pullback. That pullback should be at either technical support or proven support or demand or supply or resistance. However that pullback is initiated, it should be into a proven area which qualifies the trade. That's step one of the qualification process. Now, the second step is assessing the risk versus your first profit taking reward. Okay? This is going to be different for each and every one of you, unique to your personal trade plan. Your trade plan, because you're a very experienced trader and you only take the highest quality trades, may be a 1-to-1. So we call that a 1R. Okay? It could be 2-to-1, could be a 2R, could be 3-to-1, meaning a 3R. In this instance, we're risking 10 ticks in hopes of taking our first profit at 30 ticks. That's a 3R. It's a multiple of 3 of the risk. Risking 10, computer populated resistance here puts us out at 30 ticks. Okay? This is risk management, guys. If you are not risk management forward in your trade plan, you are going to be losing money. Okay? You're going to be blowing up accounts. You're going to be getting margin calls and all kinds of stuff. It is going to be you're going to be losing prop firm accounts. The risk management is the absolute forefront of a profitable trader. So, trend change, correction that penetrates the profit band into support, we assess a 10 tick risk with a 30 tick profit taking opportunity. 3R, if that's acceptable to your trade plan and all of this checks all the boxes of your trade plan, you've got yourself a qualified trade, right? So we want to buy at the top of the printed candle, place our stop at the bottom of the printed candle. That's a risk of 10. And we want to place a limit order to take profit here at 30 ticks. Now, you could take it all off and just be done, okay? I'm a big proponent of paying myself and protecting myself. And I'm going to walk you through kind of what that looks like. So at target 1, at 30 ticks, I'm going to sell a portion of my trade. You can decide what that portion is, right? Then I'm going to take my stop and move it to my entry. Now, the balance of my trade is ultimately dictated by the market either rejecting and hitting my stop loss for break even on the balance of my trade, or gracing me with the opportunity to take more profits. You'll notice that the market pulled back through the profit band one more time. And once this trigger candle was printed and the market pulled back higher, basically creating a new correction through the profit band, not at support definably, but basically a new correction. You can see that this low coincides with this high, so it's just, break of structure, retest of structure. I would move my stop from my entry right underneath this candle, leaving it alone, hoping that if I take out and push higher into R2 to be capturing more profits. Now, some people, once they penetrate this level, they would end up taking more profits. I will leave that to you to decide. I'm not here to dictate to you how to manage your money. I'm simply here to illustrate to you so that you can learn from proper risk management execution. Whatever you do or don't do is totally up to you. I'm not here to dictate that to you. But this trade ran as high as 65 ticks, right? Now notice we have a trigger bar, and we pull through the profit band again here and print a new trigger bar. So from this low, I would then be taking my stop and placing it right below the print of this trigger bar, because we may push back higher. And if we don't, I still end up getting stopped out at 33 ticks. If you took more profit along the way, if that's what your trade plan tells you, to do, phenomenal. If you didn't, and you took partial profits here and got stopped out here, you still accomplished a 3R, which you should be extraordinarily proud of, okay? Traders die to achieve a 3R. It's actually a 3.3R here at your stop out. Irrelevant. Average it out. It is what it is. But guys, this is it. If you are not proficient at identifying support and resistance, or supply and demand, I don't care which terminology you use, lean on the computer. You're already leaning on the computer utilizing software to trade with. Okay? There's nothing wrong with that, right? Like, you're utilizing a software-based technology indicator program. I don't care what you call it. So you're already leaning on that. Why not lean on the computer at that point to populate your support and resistance for your consideration of not only risk assessment, right? Because without this, you wouldn't have known your risk was a 3R. You would have just guessed and been like, all right, maybe I'll take profit here. But this tells you, all right, here's your entry at support. There's your trigger entry. There's your risk, 10 ticks. Your next area of resistance overhead here is at 30 ticks. It gave you the 3R so that you knew exactly what the potential was and where you should be taking your first amount of profit. So if you're using software to trade with, if you're using an indicator, if you're using some form of technology to trade with outside of just traditional price action and volume, guys, lean on it. If you're not going to do your own traditional analysis where you're going to look at multiple time frames and find support and resistance and areas of interest and supply and demand, which is totally fine. Most newer traders are not going to. Right? They want the tool to do it for them. Well, this tool identifies, and then your job as the trader is to qualify. You want your trigger to be at support or resistance depending on your direction. You want to be able to assess what your risk reward is at entry so that you know if this meets your criteria or not. Just because you're trading with an indicator or software doesn't mean you get to throw this idea of a trade plan out, right? Like that doesn't mean anything. It means that you need to take your trade plan and incorporate whatever tool it is that you're using. It could be any type of indicator, right? Doesn't matter to me. In this instance, we're talking about the profit pack. So this Renko style software, driven by volume, adjusted by volume, you need to say, all right, I need to take the components out of my trade plan that were filtered into traditional analysis, and I need to replace it with the profit pack. And then I need to still implement my risk management and all the other components, the psychology, the news releases, the days and times you're going to trade. Like, you don't get to neglect the entire job as a trader just because you're using a piece of software, right? The software is designed to make your life easier, but it doesn't mean that it removes or negates the responsibilities of being a trader. So I encourage you, whether you're trading with the profit pack or any other form of technology or software, that you are using it as it's designed to be used, and that you are still incorporating every element of a trade plan into the use of that software. So I hope you guys enjoyed this video. If you found it informational, if you learned something, if it's reinforcing things that maybe you need to work on, if you enjoy any of the content I put out, I appreciate a like of the video. If you want to see more content, make sure that it hits your feed. Please subscribe to the channel. If I can help you in any way, please feel free to reach out to me. I do respond to the comments. Below this video is all my contact information. I am a futures trader, but the profit pack can be used for futures, Forex, stocks, cryptocurrencies, and I even have options traders using it and taking it to the options market. So it's really totally up to you. But I appreciate your time. God bless, guys. I'll see you in the next video, and I hope your trading is going well.